Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is March 9th, 2023. This is a morning Forex technical report where I take a look at some of the major currency pairs that are and the technicals that are driving those currency pairs from a risk-defining basis, from a target-defining basis, from a bias-defining basis. Let's get into it. We still have one more day until the non-farm payroll report is released tomorrow. We know that Fed's chair and the other Fed officials are anxiously awaiting that report. Fed chair explicitly said yesterday that the March decision is not yet made on whether it's 25 basis points or 50 basis points, that the decision is based on data dependency. So that includes the U.S. jobs report tomorrow, along with the CPI report, which will be released on Tuesday. So let's take a look at the euro versus U.S. dollar here and see what we're seeing in trading here today. We see a little bit of an upswing here today. This is seeing a lower dollar, but the price has moved back into, or did move back into, a swing area. The swing area is defined by different swing lows and swing highs all through this area through here. You can see how the market moved above and below the area and then broke below it in trading on Tuesday. And in trading yesterday, we came up toward that area, and today we moved into the area. We would need to get above this swing area up to 105.85 level, and I might also add that getting above the 38.2% retracement at 1.05888 would also be somewhat of a minimum target that if the buyers are to take more control, they need to get above that level. But so far we are seeing some sellers lean against that level. The current price trades at 105.58, which is moving away from that swing area up through here. So we seem to have some sort of a ceiling here for the euro versus US dollar. Again, we have a key release tomorrow, so not expecting a lot of movement here today. So pay attention to that swing area on the top side. See if sellers can put a lid on the pair heading into that jobs report. On the downside, the 100-day moving average is inching higher and higher. You can imagine that in tomorrow's trade, it would be, if you take another step to the upside, it'd be right near the low that we saw in trading yesterday at 105.23. So that level is going to be a key level on the downside going into the jobs report tomorrow, and later today, as for that matter, if the price were to go down today, getting below the 100-day moving average would increase the bearish bias for the euro versus US dollar. The price is not traded below the 100-day moving average. Going to the daily chart here since all the way back here, which is back in November 10th to be exact. So getting below that level would be more bearish, and we look toward the low price that we saw in January, the low for the year at 104.84, and the 38.2% retracement of this move to the upside at 104.60. So that's a look at the euro versus US dollar. Let's take a look at the dollar versus yen. And on this chart, we did see the dollar yen move to the downside. The yen moved to the upside. That was despite what we saw in Japan as a weaker than expected GDP that came out. The Bank of Japan is likely to remain with their policy in place, their stimulus policy. That should weaken the yen, but we didn't see that. We saw more of the technicals taking control in the dollar versus yen, with the yen moving to the upside, the dollar moving to the downside. What gave the sellers some confidence was the inability to move above the 200-day moving average. That's the green line in this chart. Early in the Asian session, we moved up to that level and then found sellers through this swing area right through here. And more recently in the European session, we saw the price move below this cluster of moving averages. This cluster of moving averages included the 100-hour moving average. That's the top blue line. The 100-day moving average, that's this step line right here near the 100-hour moving average. And actually it's below it, it's right here. And the 200-hour moving average, that's a green line in this chart. Moving below that level and then coming up and retesting the level through here in the early US session has the sellers more in control. From a technical perspective, we would need to move above these levels to increase the bullish bias for the dollar versus yen in the trading day here in the short term. On the downside, as you can see, we're moving below the 50% of just this leg to the upside here in the dollar versus yen. Moving below that level, we'll start to target the low price that we saw on Tuesday's trade that comes in at 135.52. This is Monday's low coming in 135.36. And then we have this swing area down through here where we had a number of different swing lows and swing highs through here before coming back down, retesting that level and the 200-hour moving average right here. And this day right here, we've found early buyers against that level. So this swing area down at 135.11 to 135.22 is going to be a key level to the downside going forward. Again, we have to stay below the 100-hour, 200-hour, 100-day moving average in order to keep the sellers more in control. If we move back above that level, look toward this swing area right through here. Take a look at the sterling versus US dollar. And if we look at this currency pair, what do we have in play? Well, that green line right here, the step green line, represents the overlay of the 200-day moving average. And as you can see, we're just below that level currently at the moment. If the price did move above it, and we should have moved higher, but we also have this other swing area through here where we have a number of different swing lows. This nice little floor being developed in this area. We broke below that floor in trading on Tuesday on the Fed chair comments, and now we're correcting back up into that swing area right through here. You'd expect that you'd see sellers against this area right through here on the first test, and so far we have. But if we were to move above that level, we'd start to look toward the 100-hour moving average. But overall, I would expect sellers against this area. It may also be that the 200-day moving average becomes an early seller again after the failed break above that level. We will see how that plays out. So there you have it. A look at some of the major currency pairs to start your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.